You probably use Visa or Mastercard every day to shop online, tap your credit card at the supermarket, or pay for your morning coffee. But what most people don't realize is that these two companies aren't just payment processors. They're quiet, global monopolies. They don't lend money, they don't take on credit risk, just by skimming a tiny fee of every transaction on earth. In this video, I'm going to break down how Visa and Mastercard built this empire, how their business model works, the risks they face, and whether they still deserve a place in your portfolio going forward. Welcome to the channel, friends. In today's video, I'm going to be going through Visa and Mastercard. This is one of the most used companies in everyday life. Normally in these videos, I'd spend some time talking about what each of these companies do. However, with something like Visa and Mastercard, it's a company we all have exposure to and we use it every single day. And for that reason, it's quite simple to explain what Visa and Mastercard does. Visa and Mastercard, they're not credit card issuers, they are actually payment networks. So if you as an individual want to buy something from a shop, there's a transaction that occurs between yourself and the merchant, the person selling the item. And these companies, Visa and Mastercard, they are the company that's behind making that transaction happen. They're not credit card issuers, they are payment networks. They are the technology that makes the transaction happen. They facilitate the transaction between the bank, the merchants, and the customers. And you might think that, okay, then how do they make money then if they do that? They just take a very tiny fee on every swipe that you make. So every transaction you do, they take a tiny fee. These two companies, they are present in over 200 countries and they're still expanding all the time. And they are two-player dominance in the sense that both of these companies, they make up 80% of the global market share in this segment. Let's talk about some of the fundamentals of these companies. So starting with Visa, you could see that they make 4.8 billion payment credentials worldwide. There's 316 billion transactions that happen. 14,500 financial institutions use them, and there's over 150 million places that it's being used. I've grouped Mastercard alongside with Visa because both companies are very similar in terms of how they work, their business model. So it's very hard to separate the two companies. When you talk about Visa, you have to talk about Mastercard, and when you talk about Mastercard, you have to talk about Visa. So that's why I'm just going to include both of them in this video. Both of these companies, they are the leaders in their industry. And just to show it, if we look just in the US alone at purchase volume shares, we've got a total of $27 trillion being spent in the US. And from that, if you combine both Visa and Mastercard, they make up over 90% of the purchase volume share. So these companies, it's very hard to compete against them. They are monopolies in their field. And the best thing about something like this is they have recurring revenue because consumers will always spend money, and that's how things will always be. And the more people that spend money, there'll be more merchants, and with more merchants, more people will spend money. And that means there'll be more users of this Visa and Mastercard network. And both these companies are established and are well trusted with big institutions and banks. And there's a big shift that's going on from cash to digital payments, and this is where Visa and Mastercard will benefit the most. Right, let's now go into the financials for Visa and Mastercard. Having a quick glance at Visa, you could see every year since 2020, their earnings per share has been increasing. And you could also see that their sales have been increasing every single year and they've been buying back their shares. This is pretty much the perfect thing to be looking at when you're an investor of any company. Visa does pay a dividend, but it's only 0.68% because this company is mainly a growth company rather than a dividend company. So many people, they don't really look at this when they invest in these companies, but just to be aware, they do pay a dividend, and the payout ratio for that dividend is 21%, so it's really low. They've got plenty of room to increase that if they wanted to. If we now move on to Mastercard, pretty much exactly the same. Their earnings per share has been increasing every single year, their sales have been increasing every single year, and their shares outstanding, they've been buying back their shares. And again, they pay a low dividend just like Visa, and their payout ratio is around the same as well at about 20%. So these two companies are very similar in that sense. Now digging deeper, I'm using FinChat to go through some of the metrics between the two companies. So we'll start with the stock price. In blue, Mastercard is currently trading at $562 and Visa is trading at $352. And when we look at the market caps, you could see that Visa is a larger company than MasterCard by around $100 billion. So Visa is the bigger company from the two, but both are really big in the grand scheme of things. If we look at the total transaction volumes, when we look at MasterCard, every single year the amount of transactions that's been happening using the MasterCard network has been increasing every single year. And in the latest calendar year, the transactions that MasterCard processed is almost $10 trillion. Then if we look at Visa, you could see that every single year the transaction volumes has been increasing every single year, and the latest year is processed $16 trillion in transactions. Visa is processing much more in transaction volume compared to MasterCard, but you could see how much of a monopoly these two companies are, because we're talking trillions of dollars over here. We can then look at the PE ratios. So you've got MasterCard in blue and Visa in orange. The average PE ratio for MasterCard is 38 and we're currently at 39. So it is trading a bit more expensive than it usually has been historically, and the same with Visa. Currently is trading at a PE ratio of 35 with an average of 34, so it's more expensive, both of these at the moment. If we look at the operating margins, these are absolutely crazy operating margins that both of these companies have, with MasterCard having operating margins of about 58% and Visa having 66%. It's very rare for companies to have such high operating margins. If we use that as a ratio, so if we do price to operating cash flow, MasterCard is currently trading below the historic average and Visa is currently trading above the historic average. If you're looking at this metric alone, then it seems as though MasterCard is a bit cheaper compared to Visa. If we look at the net profit margins, both of these are close to 50% in net profit margins. So from all of the money that it earns, after taxes, after all the expenses, they pocket about 50% of it, which again is absolutely crazy. And it's not just 1 or 2 years, like this has been consistent since 2018. Every single year we're close to 50% in net profit margins. We can then look at the price to free cash flow, and with this one MasterCard is trading below the historic average and Visa is trading above the historic average. And if we look at the free cash flow per share, both of them is in a steady uptrend. So it's really good to see these things. And the free cash flow yield, Visa is trading below the historic average and MasterCard is trading above the historic average. A higher free cash flow yield would signify that the company is trading a bit cheaper. So from this metric, MasterCard does look a bit better compared to Visa. We can look at the EV to sales ratio. Both of these are trading above the historic average. We can look at the EV to EBIT ratio, and again both of these are trading above the historic average. And if we look at the total shares outstanding, you could see that both companies are buying back their own shares, so it's really good to see. Now let's talk about some of the risk with Visa and MasterCard. Recently, last Friday, both of these stocks, they dropped about 4 or 5%. And the reason being is because companies like Walmart, they were looking into whether issuing stablecoins might make sense for them. And for those that don't know, stablecoins are a cryptocurrency. So if you look at the cryptocurrency coin market cap, this shows all of the top cryptocurrencies from the highest market cap to the lowest market cap. So you can see Bitcoin is the king when it comes to cryptocurrency, but the most popular stablecoin is something called Tether, so USDT. The price of this is always $1. That's just how it is, because it's meant to be the same as what the actual dollar is. So there can sometimes be some variations in that, but overall $1 is what the Tether should be. And the reason that Visa and MasterCard dropped on this news is because cryptocurrency has always been a risk with Visa and MasterCard, because the way the two companies work is when you make a transaction, they are the technology that facilitates the transaction. Whereas if you use something like a stablecoin, then there's no middle person. I can transfer it from one person to another and there's no one in the middle. And if that's the case, then something like Visa or MasterCard is not needed. The only thing I'd say to that is this sort of news is not new. It happens once every 2 years or so, and conveniently it happens during a bull market when the price of crypto has been going high. But so far when this news has been happening, nothing has ever come from it. And if we were to just think for a moment that this thing was to actually happen, stablecoins get implemented and things like Walmart, they start accepting stablecoins, the question then becomes, how will it work? If a transaction fails, does a consumer lose out on their money? Because with cryptocurrency, if you do a wrong transaction, your money's gone forever. Whereas with something like MasterCard, there are things like chargebacks that you can do where if you feel that you've been scammed or if you're not satisfied with the service that you've received, within 60 days you can do a chargeback. And MasterCard and Visa, they can investigate and give your money back. So what happens in that sort of situation? What happens in the situation of a return? In this sort of situation, how does the merchant protect themselves and how does the consumer protect themselves? That's a very big question that needs to be answered. So this is one of the reasons why Visa and Mastercard both dropped on the day. For someone from Mastercard, they did speak in regards to the news, and what they said is that unlocking this is core to how we navigate the rapidly changing world. It gives the people and the business the freedom they want by providing the choices they deserve. So essentially, Mastercard, they know that stablecoins are a threat. Rather than thinking of it as a competitor, they want to try and incorporate that into the way they work, and maybe they might solve some of the problems that merchants might have when it comes to things like returns, etc. My personal opinion is that stablecoins at the moment is not a threat to Mastercard or Visa. I think it'll be a very long way before stablecoins do get accepted. A lot of questions need to be answered, and even if stablecoins were to be implemented, I think that Master and Visa card, they will play a very large part in some way in making the transactions happen, even when things do move to stablecoins, if it does. Now, if we look at some of the competitors for Visa and Mastercard, you could see the main competitors over here. So we've got American Express and we've got Discover. These two together make up about 9% of the market share in the US. They're very small compared to Visa and Mastercard, and from these, the bigger threat is American Express. With the network effect and the monopoly that Mastercard and Visa operate, it's very hard for these competitors to take more of a market share from Visa and Mastercard. There are other fintech companies, so you got things like Block, PayPal, Apple Pay, Stripe, but with all of these, they still use the infrastructure from Visa and Mastercard, so they do end up benefiting these companies anyway. The main threat that we spoke about is the threat from cryptocurrency, mainly stable coins. But again, I think that Visa and Mastercard, they'll still play a part when it comes to stablecoins, if it comes to it. Right, so going forwards, we can look at the forward PE for both Visa and Mastercard, and both of them are currently trading above the forward PE. Other things we can look at is what the future estimates are for these companies. So if we start with Mastercard, you could see that when we look at the revenues, by the end of this year, they're expecting to grow 13%. Next year, they expect it to grow 11% and 12% the year after. So we're talking double-digit growths every single year, over 30 analysts looking at it. And if we do the same thing with the earnings per share, you could see 10% this year, 16% next year, 16% the year after, with over 30 analysts looking. And if we look at Visa, by the end of this year, 10% growth, 10% next year, and 10% the year after. And with their earnings per share, 14% this year, 12% next year, 13% next year. So both companies, double-digit growth, and that's really good to see. The other thing to look at is to see what Morningstar are saying when it comes to Visa. With Morningstar, they have a fair value estimate of $306 for Visa, and currently well above that at $352. And if we were to look at Mastercard, Mastercard has a fair value estimate of $500, and we're currently well above it at about $560. Going forwards with Mastercard and Visa, they both, from their earnings call, they are both bullish in emerging markets. So they are saying that there's massive potential in companies like India, Africa, Southeast Asia, where majority they operate in cash, but that's starting to move onto a digital payment system now, and Visa and Mastercard will definitely benefit from those. There are also fintech partnerships, so they're powering neobanks, crypto cards, and they are both heavily investing in cybersecurity, AI, infrastructure, etc. If we look at the technicals, Visa straight line up since inception, so since 2008, straight line up. If we look at Visa against the S&P 500, again you could see outperformance of the S&P 500. It has had some years of downtrend, but now it's back in an uptrend. The moving averages are in an uptrend as well. If we do the same thing and look at Mastercard, zoom out since inception, straight line up. And if we do Mastercard against the S&P 500, again straight line up with a moving average trending upwards. We're currently below the moving average, but the overall trend is up. So in conclusion, what do I think about Visa and Mastercard? I think these two companies, they are monopolies. They have very deep moats, they have massive scale, and they have global reach. They're trusted brands with high barriers to entry, and they're still growing. Even though they are mature businesses, they still have double-digit growth planned. And I think that they are great long-term compounders if bought at a fair value. I believe that everyone should have these companies in their portfolio and just continue building on the positions. If I go to my portfolio, you can see that when it comes to Mastercard, I've got a position of about £2,800, and if I look at Visa, I've only got a £150 position in Visa. And my intention is that once these two companies start coming back below some of the historical averages, then I'm going to be buying these companies. These companies are there just to buy, hold and enjoy. The key historical averages that I'm referring to is things like the PE ratio, the price to operating cash flow, the EV to EBIT, and even the forward PE. So when some of these start coming below the historical averages, I'm more than happy to continue increasing my Mastercard and Visa positions. And I'm hoping for these two companies to be a very long-term position in my portfolios, because they have consistently outperformed the S&P 500 and they are mature companies. They're very safe to invest in my opinion. If you found this video useful, please like and subscribe. And if you want to see what I hold in my portfolio, click on this video over here.